Hey, NASDAQ, we get the best dope on the markets. Trading is risky. Holy camole. I am your technical analyst from the trading floors of yesteryear. In this isn't what I want to look at. This is actually meets here. Real fast here. 50-day moving average here. There is the red. Here's the 50-day moving average back in a back month in there, and there it is in here. Here's the 200. Got a report coming up in cattle tomorrow, Friday. Today is March 19th. All right, let's go into crude oil. Everybody's hearing about crude oil here. So this is the Brent contract here. Here's the volume here. We're rolling here. They're rolling out of the May into the June here. Here's the open interest. Okay, so this is the biggest open interest. And so one thing I wanted to, let's see here. Okay, so what we're looking, top left-hand corner is June crude oil spread. Okay, June 26, June 27. Okay, another way to sell the front months. Okay, and in the middle, top in the middle here, this is Dece here. This is a longer-term chart here, just for some levels here. I think people are looking to sell, well, you might be looking to sell crude oil, put it that way. Here's the May crude, just a plain Jane chart. This is the same thing here. This is in the May here. This is a little bit closer analysis here. This is May naked Brent. Here's the same chart on a monthly here. So we did trade up here. I have a couple sequences here, okay? You're not sure, and so my numbers, I got the same number here, but they're $4, $3 in between, okay? Those are good levels. This is May. This is Brent minus WTI, okay? So that's starting to put a premium in here. You can see where I highlighted it right at the beginning of the war here. You can see a couple sevens. They were already buying, it was a pattern, buying Brent, selling crude. Here's another chart here. This is, wow, that's a little long term here. That's premium information here. Here's another one, 1045. This is a soybean spread here. Soybeans are, meal is on fire. Soybean meal up $11 today, last I looked here. It's 12.50. We're getting ready to go into close. This is July meal a little while ago when we were up $8.50. So here, how do I make money off your levels? You buy these powder blues, okay? Okay, right there. Anyway, here, this is it. We got an outside up week, long-term trend line here, but we did get over it. Let's go to the next chart here. This is sugar here. You might have been hearing about some stuff going on in sugar, Middle East and that. Here you got a nice head and shoulders breakout the last 2 days here. Coming back up to a couple levels right here. This is sugar. This is sep corn here. You could pause these. That's all. Yeah, don't get out of the April contracts. This is a meal just on a 5-minute here. So you can see they were already buying it. Funds are long this stuff. And, here's a more intraday chart here. That's how look at this. You sell it right into that. And this is where the commercials take it on. Or whoever, these would be longer term traders at 309.50. So, this is silver here. This is an intraday chart here. Powder blues, babe. This is listen, that's the yearly, okay? So I display charts here for you. This was silver here. This is on the year percent. We got down to -8% here, but look at us. Look at how scary this mother is. We were just up 10% 2 days ago on the year, and then you got down 10%. We were just up 25% a week ago. Okay, that's silver. These markets are really, really volatile. That's another meal chart. This is hogs. As a matter of fact, I think hogs we're breaking still some more. In hogs, this was like a breakout trend line over here. Here, you can see here, the blue, see the blue line right there? So it comes from here to here. Okay, so this would have been a breakout. And, this required, I had a client here. We were short, we got out, and then re-shorted it. And we went one more time up here, and then all of a sudden we start coming down here. See the pattern right there? See the 7 right there? See that 7? I know it's small, but you can blow it up like this. Okay? This is crude oil here. Okay, we have rolled into the May contract. May. This is May. Okay, get out, close your tabs on April. You do not want to be in April. It's thin. And it just goes like that. It just goes in a couple days. This is crude oil here. Look at this. Somebody bought a piss load of crude oil here. We went up to par 48, and then we broke $4. And here, we just got under here, 95.12 here. Okay? See this mapped out right here? Here it's the low, okay? Here it's the highs, okay? So I have things mapped out on here. If you, you have an interest and you're like, hey, I'm my own game here, but I could just use some levels here. So these would be some levels, it depends on your trader profile here. This is last week's high there, 324.5 in the meal. Here's bean oil here, a little bit of a different story here. We went from 49 to 70, okay? Funds are loaded long. They have flipped. I've been following the funds here in bean oil, and they've been wrong for quite a long time here. They could have stuff hidden in other things or things against other things, but this is July beans right here. This is a big area right here, okay? We went limit down, okay, Monday. You just do that, high close, and all of a sudden it's just over, the grains. But in the meantime, you had funds buying this stuff here. New high close, everything about it. I do have some levels here, but, I do have levels here. That's what you trade off of. Here's another one, So here's the long-term trend line. This is corn here. Another thing I do, I had an alarm go off today. There was a large trade, 8,000 by 4,000. I don't remember when it was, but I get a option player from a fellow pit associate, pit trader, and that does options. Oh, well, look at this. We just rallied up to 72.04. This is $7 off the bottom. Okay, we just closed right here. We just closed the day right here. Okay, smack ass steady, 71.19. Find out what it is. So anyway, so that's what the corn here. Let me put this on a daily here in corn. Okay, this will be a new high close. This is wheat over here. This is gold here. I'm out of order here, but this is gold. This is an intraday chart here. And I had talked about gold here. I talked about 2 weeks ago that the central banks they've been buying gold, and now all of a sudden they got a shock. And if they can't get some energy for those people, or they're going to be having to pay super high bills, okay, like Europe, because they have to go out and buy the gas because they shut down all their wells, that maybe gold was a possible bear sell. And then here you get the right here you get the candlesticks. This was the. Hang on a second. We had an apex up here somewhere. It must have been right here. Downward slope or an upward slope, I thought. And but anyway, so here you got to see this blue trend line here. Here it's the low. Here the low again. Close above here. Over here. Okay. Okay. There's the apex. 50-50, call it. I thought it was at 51.50. Anyway, so here's how we started trading down. We bottlenecked. This is on what? The 16th. Today's the 19th. And then we start. Here you get a trend line, long-term, decent long-term trend line. We're at all-time highs. So here it's the low. You close there exactly. And then here it's the high. And then you got a high. Here you take a smidge off a high. At this point, your buy stop would have been up here. You got 3 levels to sell it against. I'm just saying here. Here you got another trend line. Here it's the low. You got 2 trend lines stuck in there. Okay, and then here, the thicker one is the one that seems to be playing. They sell it back down to the close because that's a candlestick trend line. And then here you go here. It's the high. Come down. Here you got a green. Here you come down. An orange is the low. Now you're getting into the olives. and you overshoot this olive by 50 bucks. Okay, and this is where we are right now. Okay, this is gold. Okay, I think we're going to keep this short. Let's just glance over at the stocks. No need to go in here. As a matter of fact, here, let me go to here, let's go to a 240 minute. Let's try to get a 240. Okay, so we've been leaking here. We've been leaking here. This is the NASDAQ. Okay, and, you know, hedge funds have been selling here. Bloomberg's been advertising. Here's the S&P. This is a new 6-month low. If I'm lying, it's 5 months here. So you'd have to go back here, September of 25. As a matter of fact, look at this. Okay, this was when it was not a spot month here. Just don't worry about it. All we're doing is worried about this stuff right here. Right here, right now. If that was the case, we'd look at it weekly. Okay, here, since the time of this video here, 71.40. We just went up to 72 here. This could be a possible tiny head and shoulders bottom here. Actually, as a matter of fact, we're breaking out. That's probably why this... Let's just see if they had the silver on a 3-minute here. Let's see if there's any volume. Look at this, no volume here. It's the aftermarket. Okay. So I've had, man, 40, 50 years of experience down at the Board of Trade. So if you need something, okay, here, for example, let's just go to equities here. Okay, so these would be my equities, okay? Here's my dad's portfolio, not Roku. Roku and Rumble are in there, but NVIDIA, the banks, Hang Seng. Matter of fact, let's just drop in on the Hang Seng. Let's just see what this is. Okay, see, so now we're breaking. This was the war. Okay, we held here. You know what? Here, hang on a second here. Let's just see here. Let's just take it from this to this spike low. Okay, so if you, which I do because I've been talking about, these guys are all hosed. The Asians, the Europeans, the China for energy needs. Well, that's what I mean. Hose for energy needs. And also India. Huge, huge, huge. You know, so here's the Nikkei here. What was that, down 2%? And, here at 58,660, 58,660. Wow, so we're down 6,000 in Nikkei. This has got to be Feb 23. What is this? March 2nd. Okay, so right around there. As a matter of fact, yeah, because here we closed the week or something like that, and then the war started. Here's the bank index here. Okay, just to reiterate, J.P. Morgan 2 weeks ago took a hit on some kind of private credit. Last week they were whatever they're doing. They're giving haircuts to all these guys that use private credit. Macro speaking, it's bearish, right? If all of a sudden we're starting, you know, it's the same thing. When Bear Stearns went down, I was coming home from the airport that day, and they collapsed. You know, that was the beginning of it. Okay, they can still hang in there, no two ways about it. There's always someone else to pay top tick. So getting back to this here, let's go back to the equities. So here, what do you got here? Oh, Nifty. This was another one I was saying that to me, this had a lot of risk on the downside. Where's March 1st or 2nd? February? Look at this thing. Okay, so about here, March 2nd, the 27th. Okay, so call it a 56. What is? Oh, this is the Nifty. This is the Indian stock. I don't know. It's an ETF. Okay, we don't care about that. Okay, we're going to call this a wrap. Email me, arp@nasdog.com. Always use a risk stop to stop the risk. How about we'll go to a trading rule, excuse, or adage? I really thought the market would come back. Holy camole, that could be costly right now. All right, have a nice day. Thanks for watching.